The bull might be here, you will start trading, and it is time to talk about risk management. I know it's a boring topic and you don't want to talk about it, but suck it up because it's essential. Jokes aside, have you ever heard about the 90-90-90 rule? 90% of the traders lose 90% of their capital within 90 days. Statistics, math, science. To not belong to the 90%, you have to have proper risk management. But what is risk management? I'm glad you asked. Now, this is the definition of risk management: the forecasting and evaluation of financial risks together with the identification of procedures to avoid or minimize their impact. Damn, that was long. In essence, this means that you have to see the risk, you have to evaluate the risk, and you have to have procedures to avoid, minimize, or completely eliminate those risks. There's only one certain thing in the market, and that is uncertainty. We're individual people who draw charts on lines and we think that we are so cool and we're trying to predict the market and we know where it goes, when in fact, nobody fucking knows where the price is going. This means we know for a fact that we do not control the outcome of any trade. The only thing we can control is our risk. Just as in life, we don't ride a bicycle without helmet, we don't drive faster than the speed limit, we don't eat ice creams on winters, and we do not risk missing the best trading content on YouTube. By not subscribing to this channel, you are missing out, so smash the subscribe button. Let's get into the details of risk management and buckle up because it is gonna be heavy. First of all, it's very important to understand that you can lose money even with a winning strategy if you do not have proper risk management in place. I assume that you have a backtested strategy with great risk reward and great hit rate. If you don't know how to create a strategy and how to backtest it, click on this video above or join our community. Link is in the description below. Trading is a game of probabilities. Think of it like a casino. The single reason casinos bring home hundreds of millions of dollars every single year is because they are consistent with their risk management. They have a backtested strategy, they did their math, and they simply execute in a boring, monotonous way. They understand that they will have winning days and they will have losing days, but they also understand that because they keep their risk and because they keep their strategy consistent, they will win at the end of the day. Now, the key here is consistency, as consistency in risk and consistency in risk reward. Now, what does consistent risk mean? It means that you identified a percentage of your total trading capital as the risk tolerance for each individual trade. For example, I don't want to risk more than 1% of my trading capital on any trade. No matter how good I feel about the chart, no matter who says what, I will not risk more than 1%. Period. No, it's not 1.2, it's not 2, it's not 5, it's not 0.5, it's 1%. And I know what you're gonna say, but I have the chart different, and then it says 2%, and then leverage. It doesn't matter. What matters is if this trade is a loser, I do not want to lose more than 1% of my total capital. And if you think that the 10x leverage has any impact on this, check out this video. We gotta talk. The only thing to remember here is that your risk should be consistent. If you have a $1,000 account and you risk 1%, that means you should not lose more than $10 on any given trade. Now, the other part is the consistent risk reward. Risk reward is the ratio between the risk I'm taking and the rewards that I'm looking to get. So 1-to-4 risk reward means I'm risking 1 unit to gain 4 units. In this case, if I risk 1%, I'm looking to gain 4%. Your strategy usually dictates the risk reward that you're taking, but a 1-to-2, 1-to-3 risk reward is absolutely normal, depending on your win rate. To put it into perspective, if you have a 1-to-3 risk reward trading setup and you always execute on your edge and you only take profits at 1-to-3, you can lose 3 out of 4 trades and still be at break even. Let's do the math. If I have 3 losing trades, that's 3 times 1%, so 3%. Then the 4th trade is a winner, meaning it brings in 3% profit. I am at break even. Now here's the catch. Have you ever heard the phrase, you cannot go broke taking profits? Well, that is exactly how you go broke, taking profits early. The phrase should be understood. You never go broke taking profits at the right time, following your own strategy. Because what happens if you don't follow your risk reward and you take profits much earlier? What happens is that you're gonna mess up your strategy. Because if you're taking profits earlier than 1-to-3, even though your strategy says you have to take it at 1-to-3, your winners will be much smaller than what you've calculated, and therefore you will need more wins to recoup the losses that you make. That might sound a little bit complicated, but what is relevant here is that you have to keep your risk reward consistent. If your strategy says it's 1-to-3, keep it at 1-to-3. Don't take profits at 1-to-1, 1-to-2. And even if you have lost 10 trades, you have to stick to your risk reward. If it still doesn't work, you have to go back and reevaluate your strategy, but never change your risk reward. Now, there are other relevant aspects that you could consider when it comes to risk management. For example, the sessions that you're going to trade or not trade, the days, the months, the times of the day, the assets, the total loss that you can have, you name it. So just to summarize it, there are 3 key things to consider when it comes to proper risk management. Number 1, you have to have a backtested winning strategy with great hit rate and great risk reward. Number 2, you have to have a selected percentage that you can allocate as a risk for each individual trade, and you have to stick to that. And 3, you have to keep your risk reward consistent. There you have it. If you have these 3, you should not be losing money in the markets. If this video gave you any value, I appreciate if you subscribe to the channel and smash the like button. I have daily live shows, educational content, and everything else you need. And if you want to become a consistently profitable trader, come and join our community, take our courses, and spend your trading days with the most amazing people on the planet. Link in the description. Thanks for watching. See you on the other side.